So let's bring in Mike Coe because he's going to break down this huge day of action. What happened here, Mike?
Yeah, so Tesla is usually the busiest single stock option, but it nearly doubled its volume today, and that meant that it represented close to 10% of all options volume, more than 15% actually of all single stock options volume. Calls did outpace puts by nearly 2 to 1, but I would describe the sentiment overall as fairly mixed. Now, if we exclude options that expire tomorrow, the next busiest contract were the September 400 calls, believe it or not. 85,000 or so of those were trading for just under $1.25 a contract. And my guess would be that this is just market participants who have a fear of missing out in the event that it does somehow miraculously rebound to those late 21 highs.
As a Tesla investor, you probably plan to hold your shares for a long time, until retirement maybe. But every time investors are presented with reasons to not stay bullish on Tesla or its stock, from the record drop in Tesla's stock price this year, Elon Musk selling shares, and even to Tesla dropping margin, there's always been a reason to stay bearish. However, investing goes beyond this, and if you're familiar with this space, then you're going to know it's all about the long term, how Tesla will perform in the coming years, and what improvements can be seen going forward. In this video, we're going to take you through various reasons why you should keep your faith in Tesla, especially if you plan to retire on Tesla stock, why Tesla remains one of the best companies to bet on, and what it is probably doing better than the others. So sit back, relax, and let's delve into what Tesla's investing has got going on for mouth-watering ROIs.
Do you have faith that Elon Musk and Tesla can keep winning against the competition? You worried about distractions. What really is the investor telling us right now about their worries for Tesla?
Hi, and thanks for having me. So that was essentially the biggest question that we asked in the survey. What do you think are the biggest risks for Tesla in the next 2 years? And the resounding answer, I would say, was rivals. The competition that's coming in from rival automakers, be it startups, be it the GMs and Fords of the world. That's what investors are watching out for. They think that is like the biggest risk facing the company. About 50% of the 630 responders, which is sort of a mix of both professional and retail investors, said that rivals are the biggest risk for this company. And the second one that I definitely want to talk about here is Elon Musk himself, the behaviors and sort of the unpredictability that Elon Musk brings with his leadership, which is also something that Tesla cannot be successful without, is something that investors flagged as one of the big risks for the company.
There's been a lot of recent concerns about how profitable Tesla's vehicles are going to be in the future, and how affordable these cars can actually be. However, it is good to note that Musk considers Tesla's total addressable market to be as huge as the entire human race on Earth. And for this reason, Tesla will likely lean towards affordability rather than profit maximization. Tesla's goal is to drive the EV revolution to a point where everyone sees the benefits of EVs and chooses to get one for themselves. And we're probably going to see this happen in the future. Hey everyone, welcome back to Tesla Tomorrow. Looking ahead, Tesla's future growth prospects are undeniably exciting. With its ongoing expansion plans, including new gigafactories and product developments, Tesla is poised to capture an even larger market share. Also, as more countries embrace electric vehicles and governments incentivize their adoption, Tesla's growth potential in 2023 becomes even more promising. No doubt, Tesla may experience downtimes at some point, but this is to be expected, especially for a growth stock like this. And so, what matters is what becomes of Tesla in the years to come. 5 years from now, will you be happy you held onto your shares? These are critical points that every Tesla investor needs to think about. As we proceed over the course of this video, you're going to realize why the short-term noise does not really matter, and what you, as an investor, should be looking out for instead. Let's get started. But before we do, if you like this type of content, hit that like button, subscribe, and turn on notifications to keep up to date on everything happening with Tesla. In Tesla's 2020 fourth quarter letter to shareholders, the automaker said it expects to grow deliveries over a multi-year horizon by an average annual growth rate of 50%. Noting that in some years, the company may grow faster or slower depending on a number of factors. And now Tesla can reflect on this bold prediction with pride. Even more, pulling off this growth helps make the company's forecast for the coming years more believable. The headline numbers from Tesla's latest quarterly update are running pretty good. Record revenues of $25 billion in a single quarter, the Model Y becoming the best-selling car in the world, and the imminent release of the Cybertruck, which it hails as the most radical new car design in a generation. Also, Tesla's second quarter results showed an adjusted net income of $3.1 billion for the quarter, which is higher than most market expectations. But a number of analysts have hitched on to Tesla's lower margins, citing the possibility of Tesla underperforming for the rest of the year. However, what they don't understand is that there is a conversational way to look at company profits. And then there is the Tesla way. What matters for Tesla stock investors is what the company is doing to the trillion-dollar car and transportation fuel industries right now, and even more, what they will do to them in the future. This is what is making analysts and investors rethink their value on Tesla and the legacy car giants that now fear for their future. Tesla's current performance is the result of investing in new tech and slashing the cost of its best-selling vehicles like the Model 3 and Y, as it seeks to ramp up production and demand towards its goal of 2 million units for the year. While the conventional car industry is focused on how much money it makes out of the hardware, selling the cars themselves and the spare parts, it's a different ballgame for Tesla. The automaker revealed that while it continues to execute on innovations to reduce the cost of manufacturing and operations, over time it also expects hardware-related profits to be accompanied by an acceleration of AI, software, and fleet-based profits. You see, Tesla's money-making season won't probably come from just making and selling cars. Rather, it's going to come from the technologies where Tesla is basically untouchable by its auto peers, at least for now and the foreseeable future. Musk describes this as the biggest single step change in asset value in history. That's how big a revolution this is going to be. Price cuts or not, Tesla will likely be putting millions of cars on the road per year. Furthermore, these vehicles could generate significant revenue for Tesla over their lifetime via software sales and subscriptions for the car company's driver assist technology. Tesla can potentially make even more money from its driver-assisted software as it works towards solving autonomous driving. While much speculation is still required to justify Tesla's stock current price, its sales momentum in such a difficult environment remains jaw-dropping. And then there's also the supercharger network. For years, major auto manufacturers were happy to leave the infrastructure to someone else. Tesla was a lone exception, building a globe-spanning network of speedy and reliable chargers that have helped to calm the nerves of range-anxious car shoppers who have bought the company's EVs. Other automakers, on the other hand, failed to connect the EV charging experience with EV sales. Perhaps it's because of them, infrastructure is unfamiliar territory, or maybe they actually weren't that interested in selling EVs in the first place. All these prove one thing, that Tesla is the one, only true EV producer we have now, and others are just playing catch-up. Although we're not trying to say that these other companies can't improve their EV business models, but as it stands, no one is coming close to touching Tesla anytime soon. But what do you think? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And for more content just like this, don't forget to click that like button and subscribe, and we'll see you in the next video. See you there.